Hi everyone, welcome to my channel. I'm Doris. I'm here to show you about my stock account and today's market performance. Right now, the net asset of my account is 72,761.49. Today's PL is a loss of $2, and the total position right now is a loss of $1,636.4. Today, SQQQ closed up 4.56% to 21.08, and United Natural Gas closed down 1.88% to $6.78. And today's market generally closed lower. Dow Jones Industrial Average closed down 0.86%. Nasdaq Composite closed down 1.53%, and S&P 500 closed down 1.26%. Right now, the software industry and the tech industry are generally leading with a loss, accompanied by the auto manufacturers also closing down 2.24%, and the financial industry closing down more than 2%. Today, the Tesla continued to lose for 3.69% after its 10% drop from yesterday. All the major indexes posted losses this week. Rising Treasury yields weighed on U.S. stocks. The U.S. stocks closed lower on Friday, and the 10-year Treasury earnings went above 5% for the first time since 2007. And it has made a heavy impact on the U.S. stocks. Investors fear that the Israeli-Palestinian conflict could escalate over the weekend. The market continued to monitor U.S. earnings and the Fed's policy outlook. Of the week in general, the three major U.S. indices fell for the week. The Dow Jones down 1.61%, S&P 500 down 2.39%, and Nasdaq down 3.16%. The rising Treasury yields this week weighed on the index. Treasury bonds sold, and the benchmark 10-year yield topped 5% for the first time in 16 years, and the 20 and 30-year yields also hit threshold levels. The yield rose as high as 5.001% at around 5 p.m. Eastern Time, above the 5% mark since July 20th, 2007. The yield on the 30-year Treasury note rose to 5.13%, a new high since 2007. The yields on the 10-year Treasury notes fell slightly on Friday, but remain at their highest levels for 16 years. Morgan Stanley Investment Management says that if 10-year Treasury yields reaches 5% or higher, it'll be a good buy point for investors. Under the current conditions, it'll be the best price to extend the portfolio duration, as the banks said that to include some long-term investments, and the yield breaking 5%, showing that it may be a really unlikely event for the near future as monetary policy began to adjust for the lowering inflation in 2024 and 2025. In the report released on Wednesday, the founder of Double Line Capital said that we like long-term Treasury bonds allow for short-term tradings during a recession. Over the past 40 years, the decline in the 30-year Treasury yields has completely reversed, soaring by nearly 400 basis points in less than 2 years. Long-term bonds have been down for about 50%, meaning that long-term bonds could now go higher. The market continued to watch U.S. earnings. Shares of Israeli photovoltaic company SolarEdge fell sharply after it cut its fiscal third-year revenue guidance. Knight-Swift Transportation was higher as it beat expected revenue and earnings in the third quarter. In the speech this week, Jerome Powell said that inflation remains high, and then the economic growth is likely to be slowed down. Therefore, it also has some room for monetary policy to remain adjusted. According to CME's Fed observation tool, Federal funds futures pricing reflects the possibility that the central bank will keep interest rate unchanged by nearly 90% at the end of November's monetary policy meeting. That's all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.